4 people on? Oh, Ed, man, what's up, dude? Long time no talk. Did you get my message about the room? I don't know if you tried all that yet. Symphony. All right. I don't see any in the chat. I don't see people over there. You guys hear me okay? Just let me know if the visual is good, and I should be sharing the chart. I'm a little bit distracted. I'm scrambling to put some things together, and I kind of was thinking S&Ps were kind of pretty good here into tomorrow. Hey, Privas, how are you? Hey, Brett, hey, man. Can you guys hear me okay? I don't want to get too far down the road and then I got to fix my audio. You can hear me? All right. And can you see the chart? And my busted up hockey nose? Okay. All right, good. I should be recording this. All right, we'll give it a let me do this. It's just 3:30 now, so I'm gonna mute it, be back in like 1 minute, and let some more people jump on. I kind of scheduled this at 3:30 so we thought maybe there would be some movement into the close if you guys had questions about the market. Or we could trade a little bit together if there was anything going on. I've been bidding down here in S&Ps. We sold pretty well. 30.22 this morning in live room, 30.18, and then I bought some at 14. I was just kind of eyeballing here in front of the 200, just in front of 30,008 to kind of get long a little bit again. Okay, you're in Bristol. Nice. How are things there today? Kind of late. What is it, like 8 o'clock, 9 o'clock there? You might get filled on these S&Ps. There you go. All right, I just got long again, back to long a couple of lots. I still have my calls that we rolled up on. And actually, I still have these 3,000 strike puts I said might be a good idea when we were on the highs. I don't know if any of you guys did anything with that. Let me see if these puts are worth anything. Fives came off, right? Just 2,000 strike puts. I think I might hang on to them. 8:30, nice. That's right, 5 hours. All right, I just want to give it just another couple minutes. I got to go yell at somebody across the hall real quick. I'll be right back. All right. So I guess the Fed's doing what is this? The fourth day of operations in the repo market, but there's nothing to see here. Just back to everybody watching Dancing with the Stars. And I can't believe bonds aren't up more on all this. I mean, they traded really. We had a lot of back and forth on. Was it Tuesday, guys? Was that Tuesday, Brett? When they first started messing around in there. Um, Look at the gold market real quick. And nice sales today. I still think we can take a run at the high again. That was pretty obvious profit take spot. Yeah, yesterday was pretty. Was it one of those days where everything just gets smashed? We traded it pretty good though. So we talked about gold's kind of in a range. There's a band down there between 1495. Here, I drew this earlier. I'll just draw it again. This is the top of the range. This is the bottom of the range. And so the euro and the dollar is doing the same thing. A couple ideas what you guys can do. So like yesterday, we had some call spreads on. So just for example, let's say you're long 15-20 strike calls and they're short the 15-10s. As we traded down here, I cover the 15-10 strike calls, book money on those down here. And then today when we rally back up, I resold those 15-10 strike calls. So it got longer via just by not having to buy more futures, just taking off the short leg of our call spreads. But now we're kind of right in the middle here. So I think it makes sense if we want to get more long down here, whether it's futures or more calls. What you can do is you could sell puts now, and you can go out 6 days on the front month strike. But I think it makes sense to sell these 1500 strike puts, or you can go deeper, 1495, 1490. More than likely that'll expire worthless down here. Even if we bounce around like this, you'll probably get a good chance at just covering those for, I bet, 80%, or just let them go to expiration. So I did that also here today. Is there anything else you guys want to look at? My my plan is we can talk the markets. We'll do some Q&A on the overall program at the end. Questions on the details of that. And then I thought, if you're going to spend some time and show up, some of you are new to the cycles and what we do. So I was going to share with you a couple strategies. There's like 3 things I made notes of. And I put together these slides because we've just been so busy trading. I put together some slides, but I didn't make them very fancy or pretty, so it doesn't really matter. Just to keep me on track. Is there anything you guys want to look at while the market's still open? This one. All right, Brett, you're kind of flat from yesterday. All right. All right, that's fine. I'm just seeing if there's anything else I need to do. So I came out of my Brent because I don't know, just not crazy about. I feel like the only reason the oil should go up is just You're trading headlines at this point. So there's not a lot of edge in that. And I haven't traded it on the short side. Typically when growth is slowing and we have inflation, growth is slowing and inflation's coming down, it's terrible for oil. You've got a strong dollar. So typically I'd be a seller in that environment. And then we just haven't traded it very much because we're worried about all the Iran risk. And it's pretty obviously evident on Sunday. So anyway, I bought a little bit on that first initial move to see if we got some follow through, and then we never did. And then I rebought and shorted WTI against it a couple times. And I just figured, the amount of buying power was taken up today. I just kicked that out. We covered some silver earlier in the day. Yeah, I think so, Brett. On the range bound on the dollar and the euro. Yeah. I mean, I think we want to play it with a dollar bullish bias. It's just I mean, it's pretty evident when you look at that gold range also. Just look at silver and then we'll get started on the details of webinar. Silver is pretty much sideways too. We talked about here, guys, there's a good cyclical concept. Failed at pi at twice, silver lately. Failed up here, failed again at 18. We talked about that yesterday. It's a good spot to short. And I made a couple moves in tens and bonds today. I bought 13 plus, sold 18 plus, took 5 ticks out. We had really nice sales yesterday up at 24 plus. Bought the lows down at 8. I did the similar thing in bonds today. Bonds have been, we're backtracking kind of to try to turn the intermediate term back up. But we talked about in the live room today, you have, you guys want me to show you? We have kind of the longer term cycle that's either going to play out or the intermediate term is going to turn back up. I'll show you in a second. But day trade, I've just been playing bonds and tens on the long side, and then I'm a little bit short ultras. So I bought 17, sold 21, bought 12, sold 18 and 24 out of my long. Actually, you're going to buy another one back right now. 15-minute cycle is pretty low. And then I don't know if you guys know ultras even more duration. So we were high in this near-term range this morning, but I'm carrying a little bit of a short as a hedge against my tens and bonds, and we're short euro-dollar futures also, which is on the front end. I'm short a couple fives against that. So what I was saying, just real quick, since the bond market's been such a pivotal place, everyone's talking about repo or negative rates, and it's been a great call that we've had going back since September, October of last year. And then this last weekly cycle, I think, has really caught a lot of people. A lot of people have given back a lot. A lot of people are losing money. A lot of people, it's just a lot of bad longs in the market. So most people missed this move when the cycle started to peak here in September, October. So this was our call. We went out. We wanted to be bullish bonds. And then we've had a core long and just been trading this for the entire move up. But this was starting to run into some longer term downtrend channels. You could see it in the 5-year market. It was just overbought on a lot of different reasons. But what I wanted to highlight was the people missed this part of the move. And then they missed this part of the move. And then everybody chased the headlines and just how fast this was moving up. Everybody chased this. And now there's a lot of bad longs in the market. And then if you'll notice, this weekly cycle is pretty much nailed every single one of these pullbacks. And that happened up here when we broke the swing line. So this is what matters from here. You see how strong of a week down we had last week? We're testing the halfway mark of last week's move. So it's going to be kind of difficult for the long end to rally further than it has already this week. And then if we take this low out, you're going to have a BCI. So my traders know what that means. And then the rest of this weekly cycle can move into October. And that's the pain trade in bonds. You get a move back to here, these lows from July, 200, and or you go all the way back to pi and the bands, which you'll have so many people twisted up and it'll be a disaster. So that's kind of the pain trade in the bond market that we care about. So there's a couple different ways to play that, but the intermediate term you can kind of see. We talked about in the team room this morning. We've been hedging at lower highs once we started breaking down here. And then that's why I have the ultra short on, because this is that area that I think the market's going to struggle. And you have last week's high right here. So there's probably some back and fill here that we can still come down. And then this is going to be the key pivot. So anyway, guys, that's the kind of stuff that we go over in the room and the analysis that we do. All right, let me bring my slides up. All right, so here's the vision in the nutshell. So, you know, I started this company, would be 3 years ago next month. And a big part of it was bringing all our directional experience that we had on the desk and with the institutions and all the primary dealers and large, you know, buy side money managers and things, and just bring it to more markets. Fixed income, the prop business got pretty much decimated by Dodd-Frank and everything that came out of the financial crisis, the leverage, deleveraging, and all that stuff. The banks it was a consistent process of them doing less directional trading, and the days of working orders for those guys, it just became a business where guys didn't want to take risks. So, I mean, I used to have Goldman working my orders overnight, and it came to a point there at the end where they wouldn't even work 10 million tens because they didn't have anybody on the they didn't have anybody in the London office for a while, and then they didn't have anybody working orders in Japan, and they said, well, we can't really pass that amount of tens on. I was like, it was only 10 million tens. I mean, we used to work 100 million fives for customers, and we were getting 2-year orders for like 10 million when we used to get 200 million a clip. It'd be like, buy us 102 15 200 million tens or 200 million twos. Okay, literally you know, a quarter below the market, another 200 million, you know, then there'd be Deutsche coming in, then we'd have, you know, Nomura and another 200 million. We would just have stacks of orders, 200 million, 200 million, 200 million, 200 million. All that went away. Twos used to move half a point. When we brought rates down, you could see even now today in the 2-year market, twos just move very little. So that business changed, and I just said, you know what? Let's take this directional stuff to independent traders. And then I wanted to trade more Forex. I wanted to get more into the futures market, trade more global macro. And so that's what we've been doing. Obviously, we've been doing a lot of coaching. We've had the signals and the analysis. And I'm going to come back to a couple of these slides, but essentially, so this, I kind of redid the site, and this is my new vision. So we've had Jenkins RM, which is, again, that's been the retail analysis education business. And now we're kind of transitioning to where we've already started doing some managed accounts, which is assets under management. And then the prop trading is something that we wanted to do. And we kind of started in the Forex markets, and it was just the partnership that we had and the amount of capital that you guys were trading. It just wasn't as exciting. It wasn't what I wanted it to be. And as we step back and I look at the futures and where the opportunity is, global macro, and where we are as far as the market goes, we've been making the dollar bullish call since April, before we pivoted to long bonds. And so you had three big market calls that we've nailed each one of those big global macro moves. And the first was the dollar, been a great call. The second was bonds, and then the third part was this gold move. So we've had all three of those moves directionally nailed. But if you're just trading Forex, I mean, yeah, the euro's gone down, the dollar's gone up, but it's been a more of a sluggish, there hasn't been as much opportunity. So if you can put together managed accounts where you can take opportunities as far as like what we call pairs trades, you can be long equities and maybe have a bearish view on the economy, but still be long stocks because they never go down. The trend hasn't changed. That's what our cycles, the model tells us. You can be long S&Ps. You can be long bonds. You can take advantage of the gold move. And with the futures, you can still trade the euro. You can still trade the yen and all the major pairs. So I see that, and I see that some of you are undercapitalized, but you're hungry. You have the same dream that I've had, that you want to trade for full time. I mean, I've been independently trading directionally and making a living from these markets since 2008. So that's kind of been one of my missions, is to help you guys get to that point where I know some of you are in jobs you don't like. Some of you want to supplement your income more. So that prop trading, that's what it's about. And I wanted to get the futures involved in that. So that's what we're going to do. And then the institutional stuff is another topic. Yeah, if you guys, Brett brings up a point on, I think you can change your chat settings. So I'm watching. If you want to jump in there and you have something to put in there, probably try to answer more of the questions at the end. But if there's just a few questions, that's fine. All right, so I'm going to kind of whip through here. So that's a little bit of my background. So I was a rates trader, started the business of Charles Schwab, and then had the chance to move to South Florida in, like I said, 2008. And it was a front row seat, what I call the kind of the end of the world. It was right when obviously we were crashing. I didn't know anything about the bond business, didn't know the language, 8s and 30 seconds and bull flatteners and bear steepeners. And it was a stressful time, but it was also pretty amazing. I mean, we had an 8-man desk, and again, we covered all the big banks. So I talked to the head trader at HSBC when they were going under, and the bank was in trouble with all their laundering and stuff. And they turned around and told the traders they're not going to pay them. And the treasury guys that we covered were making money. Meanwhile, everybody else was pretty much losing money because stocks were getting crushed. Even gold was going down at periods. I mean, everybody was just getting absolutely destroyed. But the bond guys, we were on the long side for most of that move. So the bond desks actually were the ones that made money. The banks were in such bad shape they wouldn't pay guys. And some of you were trading those markets. You know how crazy that was. But I got a lot of different little stories like that from kind of being right in the thick of it. But we did well. I mean, we had some of our best years then. We do $8 million 1 year on the desk. I know what it's like to have $50,000 days. We were having $800,000 months. So we took a lot of risks and traded big size, but we weren't holding positions a lot overnight. It was mostly all directional stuff, day trade. But that's kind of the background. Coaching is something I like to think I'm pretty good at. I've coached. I trained 5 traders on the desk and 10 years on the institutional side. A couple of them went on to hedge funds. One of them's doing really successful down here now. He's completely on his own. But actually, what I'm most proud of is in 10 years, I trained 5 guys. Just they didn't know anything. Didn't know anything about bonds. One, I found a couple of sheets from one of my traders. I'll just show you guys right now. He played soccer at Ohio, and he came in the business struggling on the sales side. Didn't know anything about treasuries. He was going to quit the business, and I mean, I knew he was an athlete, and like I knew how hungry he was and stuff, and so I told him I'd teach him the business, and he was literally about to quit, and I taught him from scratch, guys. So the point is I've been doing this for a long time, is teaching guys markets they've never traded, whether it's Forex or, again, the bond market's really tough to get your mind around, and working orders is a lot of different risks. So I have all that experience. Like when we're talking about running a prop desk and you guys want to do this for a living, there's lots of little things that you'd have to learn, like canceling your orders in front of numbers, and how you want to go home overnight, and just a lot of little nuances. So, but anyway, so I took 5 guys in 10 years on the institutional side, but in less than 3 years, starting my company here, we got 224 customers, and I've coached 54 traders now, and that's Forex, futures, and I'll show you some of their results. But that's the kind of stuff that I like. But this is one of my guys' results. This was 2015, and then this is the kind of stuff that we'll do where I made him track his trades, his number of winning days, his losing days, break-even days, win-loss ratios. And the firm that we're going to partner with, they have a lot of this built into a dashboard. I mean, I've just talked to him about it and I've seen it, but I haven't used it before, so it'll be a little bit of a learning experience. But so these are kind of some of the numbers, and there's a lot of training that goes on. Like he's looking over my shoulder, I'm teaching him the model, all the stuff that I put into the course that you're going to get with part of the program. It's all the same stuff. So, but anyway, you can see, like, he starts out here. This was, I guess, April. Then we did seven in May. I helped him do, but you should have seen how happy and pumped up he was. Like 3 months in, once I let him start trading, he did almost 22 grand. I mean, the guy's like, that's just a cool feeling when you take somebody, and he was literally going to quit the business. But that was a good month. So anyway, I just pulled this out from earlier. These are some of my charts here. January, this was a good month. This is the type of consistency, guys. I mean, all right, 89% win rate. Oh, pretty good. So we can come back to that. Let me just check the market here. It's about to close. The bonds are coming off. I think I'm just going to hold these ultras till kind of fighting a cold here this week. Anyway, I'm going to hold those ultras. Just thinking out loud. Stocks are still above 3,000. All right, so that's a little bit about me. I don't know how much time I have to get in my backstory, but these are some notes I was writing out. And The big thing, guys, is like starting out as a trader. I went through a couple prop shops before I even got licensed at Schwab, and I was always trading options at on my own in college, and just really just learning about them and trading them around and losing money and all the usual stuff that you go through. There was a prop guy I started with and never met him, and he was out of New York. He was trading Goldman Sachs a bunch, and like this must have been 2006, 2005, 2006. And so I've gone through a lot of these prop programs, and I know what's helpful and I know what's not, and kind of what the new trader needs, and then the same kind of um, hands off, more of an experienced trader. You got to give them, but at the same time, kind of you got to kind of work together to sometimes keep your ego in check or their confidence and stuff like that. But the road to being a consistent trader has been a long one for me. And I think a lot of you have kind of stood on my shoulders. And when you go through the course and stuff, you're going to be able to avoid a lot of those same roads that every trader goes down, whether it's thinking that moving average crosses is a good strategy and you realize how lagging that is after it doesn't work for a long time, chasing and pressing into the lows, and all this stuff I've worked on, from journaling and trying to figure out what works and what doesn't work, and um, combining different strategies and trying to figure out, okay, why do I have good winning streaks? And then all that stuff that goes into just journaling for pretty much my entire life, ever since I liked investing in the markets. But when you guys get to certain points where, like, I remember when I was running CG, I would get up 2:30 or 3, go to the office, trade Forex, go to the gym, come back to the office, and I would already be up like 5, 6, 7, 8 grand. The rest of the guys in the shop, fixed income guys, would come in, we'd sit down, and I would be pretty much up a decent amount by noon, and they were, you know, they were still trying to make calls and just put their orders out and stuff like that. But there was a time where I would do that, and then I would keep trading in the afternoon, and I'd try to push it. And you get to start points in your career where you want to try to go to the next level, and it's easy to start pressing. Well, there was certain things that I realized. I didn't realize it at the time, but it's a process of like continually failing, and the pain of being up 5, 6, 7, 8 grand, trying to add and press into the lows and not really realize what you're doing. There's times I had no concept of the cycles, and I would get to those points and I would do it over and over, and I would be up, and I'd go home literally up like $200. Or sometimes I'd be up all morning, all day, have a great day, afternoon, press it, and then give it all back and be down like 2 grand. And there's times when you do that a dozen times, 2 dozen times. Or I've had months where I've never had a losing month, but I've had months where I've been up big and then give it all back. And I've never been on. I've been earning money from the market, no salary, since 2008, all directionally. Well, a lot of Wall Street shops, you get a salary, a bonus. You can take a bunch of risk. If you make a bunch of money, you get bonused. If you blow up, you just go to another shop. Well, we're a boutique firm. We're taking our own risk. If I lost money, I had to pay the firm back. So it's a completely different mentality. It's a completely different way to trade. And but looking back, that's what made me so focused on, I got to get the market right directionally. You got to figure it out, because you can only, I have a young family, I got a wife, I had gotten divorced, I got attorney fees, lawyer fees, I got to pay all this. I was paying $5,000, $6,000, $7,000 before tax and alimony, all that shit. And when you when you make a bunch of money to cover all that, and then you lose it all in the last week, it's just a horrible feeling. So I know I know that pain in the process of going through all that is what I'm saying. And it's going through that where you have to sit down and really figure out, like, why do I keep doing this? What is it that, what action am I doing that keeps giving me this result? And that's the stuff that I went through and I learned in that process that, okay, you don't sell lower lows. We don't short into lower lows. We take profit into lower lows. I call that pressing. Um, it's that type of story. I just tell you that story because that's how I came about to realize, like, all right, there's got to be more cycles. There's got to be something else here that I can use from a timing perspective to keep me from doing these certain patterns. And it's a process of getting rid of that stuff. Then you see the consistency um, come out. So, but that's what the coaching's all about in the prop program. So I was going to share with you guys a couple cycle concepts. Um, who's new on here? Do you guys want me to show you a couple things, or do you guys just want to get into the details? Some of you are probably going to watch recording. Here, let me just hit on a couple. This might be old for some of you. Here, so like silver. If you just most traders, whether they're new or even the seasoned like Wall Street guys, there's not a lot of them that understand the whole cyclical analysis. It's just kind of a like I think it was, they call it Dewey. I don't know if you guys ever heard of Dewey? Foundation for the Study of Cycles. He's considered like one of the fathers of cycles. He studied cycles across a bunch of different sciences. And if you go to their website, he's got some really cool like work he's done on cycles from, I don't know, like amoebas, different animals stuff, cycles and markets going back, all different kinds of markets from way back. He was one of the first to do a lot of cyclical analysis, but it was always kind of hush hush. And some of the guys that picked up on it were like Paul Tudor, um, some of the guys over at Sequoia, and so there's a group of them, and I don't even know if they still get together. I've kind of looked into it. You can be a part of that. Used to be you could be a part of that group. So, but outside of that, I don't think there was a lot. Martin Armstrong was a part of that. He was like the head. He was one of their head. I don't know if you call it sitting on the board, but he did. I think he was one of the founding members of that group. And so, actually, I don't know. I can't remember how I stumbled across Armstrong. I don't know if some of you are familiar with him, Martin Armstrong. I talk about him a lot. I've incorporated a lot of his stuff into my work. And that was just one of the guys that I followed along my journey of discovery and experimenting with things. But he was pretty instrumental on the big picture things that I then took to more of a micro, smaller time frame. And I don't even know why I'm bringing that up, but I guess I would say if there's one or two things that you guys could do is understand the cyclicality of this. Oh, that's what I was gonna say. Is most traders, even the experienced guys on Wall Street, nobody really talks about the time component. So, two concepts real quickly is the one I'm always talking about online is the pi line, and that's just a simple 314 period moving average, and it seems silly, and it's not just about a line on the chart. We don't really. I teach you guys we don't trade based on a line on the chart. Like some people will literally be bullish above it or below it. One of my bosses in the treasury markets, he made big money, was a big trader, board of trade guy, and that was his philosophy. He was like, are you above the 30-day? He's bullish. If you're below it, he's bearish. He's one of the first technical analysis guys in the 80s down in the bond pits. And then he was moved upstairs and they write out technical analysis. And then he had to teach everybody what technical analysis was. Now it's the opposite. Now everybody is a self-proclaimed technical analyst because there's just so much stuff out there. But he was very basic in that. So it's not about, are you above or below a line? I care more about, hey, what's the direction of the slope of the moving average? And then we treat those lines as areas. But the pi line is pretty amazing because there is a design to this universe. Whether you want to talk about, you could get really deep into like the science of consciousness, the cyclicality of how energy travels, and I teach all that stuff. You guys will get in the trading courses and the trading package that comes in the prop trading program. I talk about all this stuff, how complex dynamical cyclical wave structures. But anytime, so what's happening here with price is it's moving away and it's coming back to that average, but it's more about it's the geometry of time. So you're tracking X amount of units of time that happen to be a derivative of a pi. And so it's capturing a lot of that cyclical ebb and flow. And then you're obviously just comparing that over a two-dimensional space. But that's why it works. So if you just play something, what we call in the northern hemisphere, above pi, your odds are going to go way up if you stay on the bullish side of that. And you can pick your time frame. I talk about which time frames we like for day trading and swing trading and long-term stuff. But then incorporating something like a stochastic, which is a equation of motion, and that's another cyclical phenomenon. And we don't use this as overbought or oversold. We use it more about the rhythm, the cycle, and how it plays out. So we look for those turning points with those particular cycles. But if you just put 314 period moving average and you have a simple stochastic, and I don't want to get into the parameters, but you can see how you're going to be able to pick some good edges. And from there, it's kind of the next question is, well, how you want to work your size around those areas. Do I just plunge in at one price? And then a lot of traders want to set their targets. I think it's a horrible way to trade. We teach more about scaling in with defined disciplined scales. It's not scale till you blow up. There's a method to it, and then scaling out with how price moves, how price gets to a certain area, in what fashion, like how steep or how momentous, and over what period of time. All that stuff matters. And when you start picking targets, you're ignoring time and momentum and volatility. So we let the cycles and the price tell us when to cover. You could pick an area that you have in mind, but you're not going to be as accurate if you just blindly picking points. Because you get close to your target, and then you're going to miss by a couple cents. It's not helpful. Like I used to trade like that. I've seen guys try to do that. It's a really rigid, frustrating way to approach things. But I bet this hourly cycle probably nailed both the last three of these highs. So nailed this high here, this cross here, nailed that high. And you had a high here that really didn't move much lower, but this one worked good. So anyway, if you just applied those two concepts and you start looking for this rhythm of time, you'll outtrade 99% of directional traders just on that two concepts. And then where you're going to get better and better is how you start working your size. I call that the art of the size. So yeah. I guess you could call that secret number one. This template was kind of big into the secrets. I don't know how much time we have, guys, to go through some of this. I'll just say we get into a lot of the psychology of trading. So there's three pillars to our model. There's execution. So, well, really the first is analysis. Oh, my throat's getting dry. 1 second. Had a better day than how I started off. Trading those bonds up pretty good. So there's three pillars. There's analysis, which is about how do we view the trends correctly, and I would say it just is what it is. Some people would say, oh yeah, I use the trend is up because of this moving average or this or that, this indicator, and that's not really how you want to do it. It's a trend, and a bullish uptrend is very specific in how you define it. It's not like a guessing game. You just have to know what to look for, and then you got to know where the different parts of the trend are consequential. But it's not that difficult. But some people still, they get confused on different time frames. They have different definitions, like whether a market's up or down by 15% or down by 20%, then it's a bear market. All that stuff is garbage. It's very easy to define a trend. It shouldn't be a guessing game. It's very specific. It either is or it isn't in an uptrend. It's either sideways, it's in a downtrend. It's just the truth of the matter. So it shouldn't be a guessing game. It's like, it is what it is. Can't talk yourself into why something is bullish or not. It's either in a bullish uptrend or it's not. So we do that on the analysis and trend side, on the price side, and then we do the cyclical stuff like I was just touching on. That's the big two parts of analysis. You could argue there's mental analysis also, which is the psychology of trading, which is kind of what we're talking about. And then there's execution, which is, how you still got to get your trades off, how you work those trades, how you scale in. You could get the market right, you could have the right view, you could have the right analysis, and you could blow the trade because your execution sucks. And then there's the risk side, which is what's your trading plan? How do you manage your risk? How do you hedge? What's your max loss per trade? How do you add and reduce to your positions? All that's kind of on the risk side. So those are the three pillars. But this, just a quick tidbit for you guys for joining. I mean, the mindset, there's a lot of things that I'll teach you also that are a complete flip of what, I don't know, 80% of the investing community or what you're going to hear in financial media. We think a lot different. So I'm going to bring you guys a different psychological approach to a lot of things, that when you switch that, the emotions that you have when you have a position on, or if you're hesitating to trade, or you're overconfident, there's usually several different problems a trader has. They're either too early, they have habits of being too early, or they're too late. Sometimes you're too early because you're overconfident. Sometimes you're too late because you're hesitant. Sometimes you don't take your profits because you're greedy. Sometimes you take profits too early because you're fearful. But there's only certain categories, and I've worked with so many traders that you can usually see which ones they're fine, because everybody has different personalities, and then which ones sometimes they got to work on. But all of that is part of the coaching, guys, where you have to first contextualize it and be aware of it, contextualize it, and then once you kind of isolate what the hell it is that you're working on, is then you can create just different habits or different routines you do throughout your trading day to kind of perfect that or get rid of a habit. And that's what the whole coaching process is about. It's like you can read all the books about this indicator, and then you can go to a different indicator. Half of it is in your mind and your psychology, and then the other part is usually mostly just managing your risk. So this idea of not needing to know is something simple that I teach. So the concept is, I don't know if I'll get into the background. I don't really have any examples. Um, um, it's actually a pretty powerful concept, but the idea is that you have to embrace the risk that's involved with investing and trading. And what that means is that too many traders. And when I used to call a bank, and I got 30 seconds to tell the 10-year trader or the swaps trader what I think about the market and where I want to buy the market. And a lot of times those guys want to express their view. Well, I think the market's going to do this because of this and the treasury funding, or like right now you have guys talking about repo and why the market should do all this stuff because they think they're so smart. And a lot of them are smart. I mean, I used to cover a guy that was literally rocket science from Oxford, ran Goldman, went and started 9 Alpha. Guy was literally a rocket scientist, but he would listen to me and my stuff because I didn't have all that noise about what the market should do. I just told him where the edges were. And the thing you get into when you let go of having to know, you stop scouring the web for anything that's going to tell you what the market's supposed to do. This constant effort of needing to know what the market's going to do. The problem with it is it puts you in a frame of mind that you start to project your opinion, your ego onto a market that is one of the most complicated things in the entire world. All the intricacies, everything's connected. Just how it's a complex machine. And then you build in these mental frameworks that totally messes you up when you're in your trade, or when something changes and you have to change your mind because you're so fixed in your thinking about what the market should do. It just screws you all up. But when you flip that and you have a mindset of you don't need to know what's going to happen, literally almost don't care. Like, it's going to go up, it's going to go sideways, it's going to go down. But what you focus on from there is, well, how are you going to play it? How are you going to manage your risk? So if the market does this, I'm going to do this, this, and this. If the market pulls back to here, I'm going to add. If it breaks this low, I'll stop out, reverse, and or hedge. So we talk a lot about that type of psychology, scenario building, embracing the risk. Once you have your edge, the probability, then it's that comes into being fearful to trade because you haven't embraced your risk. Anyway, I'm not going to spend any time on this last one. Well, yeah, I kind of have to. So one of the big points, guys, on the coaching and the prop program, I'm going to get into the details, is if you guys are struggling, or even as you want to get better, everybody should want to be improved and get better. A lot of the answers you have, the problems you have, the answers you're going to have a hard time getting to, because if you already had the answers, you wouldn't be struggling with the same stuff over and over and over again. And it took me a while to figure that out, that I needed a couple coaches, or I progressed a lot faster when I had good traders next to me that I could use their mind to try to figure out why I was getting certain results. Because I've gone the other route too, where it's such a longer process of journaling and trying to figure out what you're doing wrong. But my point is that as a good coach can ask you questions that gets you to think outside of your own head. Because if you already knew all the solution, if you had it, then you wouldn't be stuck where you are. And so that's the real key to anything, any high level coaching, is being able to ask the right questions to figure out specifically what it is you as the trader, the individual, where you're hung up on, where some of your habits are and stuff. All right, so let me just get into the details, and then you guys can ask questions. So, all right. So if you guys may or may not know, right now, the way people kind of participated with us is you kind of have the option to be do it yourself. So I had a Forex course. I did an intro to Forex. Most recently, I did this Pi cycle trading secrets that I just kind of touched on. Previous, you're a newbie. Still choose educator trader. You only want futures. Well, you say no bonds though. I mean, you trade futures on the bond market, right? So we'd trade that a lot. And this is what's nice too, guys, is like, so me 10 years of trading bonds, we traded mostly cash treasuries, but it's the same directional stuff. But the same way we used to trade the yield curve, what's really nice about the treasury market, and I can teach you this in our prop program because it's all futures, is what's nice about the treasury market is it's a nice natural hedge where you can kind of have both sides of the market, and you can trade both sides of the market and make money while not having a whole lot of directional risk. Or there's times like right now where bonds had a really good July and beginning of August, right? And then the bond market, all the bulls in the bond markets have given a lot back. Well, we've been pretty good about hedging that and taking profits, taking down the long exposure, but then trading fives, like short fives and ultras and other parts of the treasury curve against our core long position which has been amazing since the cycle turning September, October. So I can teach you guys that. And there's not a lot of people that have that knowledge of the bond market. And when you get into times like we have now, where you might be rolling into recession, we're 10 years off the low. Believe me, there's guys that haven't seen a bear market, that haven't been trading since 2008. They're equity bulls, and they all get absolutely run over when the cycle turns. And there's not a lot of people that have the flexibility to know to go to bonds. But then you look at a lot of the big successful hedge funds, they all made a lot of their big money in the bond markets when you had down bear markets or the overall economy rolled over. But I've always been about just going where the opportunity is. So if it's in the gold market, if it's in the metals market, commodities peaked in 2011 with the global business cycle. And so we're actually very close to probably a low. And with this next wave, you probably see a commodity, like a 4 or 6 year commodity run. It'll kind of resemble 2009 to 2011. It's probably after this next deflationary move. But anyway, we can get into longer term cycles. But the point is that if that's where the opportunity is, we can trade that. You can trade the futures on the grains, or like I said, the metals, or ag, whatever, energy. So there's a trading course where you just want to go at your own. That's fine. I've got courses for that. I put together basically this package that's $6,000 of value. I've been giving you guys this deep discount I've offered it there for a while now. And then we had the coaching and mentorship program, which was you get all the trading courses, but then you work with me we've had it between 8 and 10 sessions, but they're group coaching sessions. They were twice a week, several hours. But I work with you as the individual, and you send me my trades. I teach you how to journal your trades, how to properly show me what you did, how you executed based on the model. I show you specifically how to do that so that you can send me your trade and I know what you did, and I can look at the chart and I say, all right, this was the right action here. This was a good entry. This was sloppy. This is what we need to work on. I can see what you did wrong here. And it's that back and forth. It's a lot of this, like I talked about, the psychology, asking questions, trying to figure out you as an individual, how to get better or what you're hung up on. But that's really where you're going to grow as a trader. you can learn and add things, but again, you got to have that coach that kind of gets you outside of your own thinking. And so I put together this whole comprehensive package. I threw in an iPad just as a bonus. I try to stack in a bunch of value for you guys in here. All these PDFs of different um, history of the business cycle I did, past group sessions and trainings. I put all that in there. And so that was the group coaching model. And that's still available. Like if you guys don't want to do the prop program, which I don't really see why you wouldn't do the prop program when it includes the courses, it includes the same type of coaching, but it's not just a fixed 10 sessions. It's basically every day you have the opportunity to be with me for an entire year. And I'm going to help you work through a program where you have very little risk, and you have a shop that's going to give you, I'll show you in a second, 150,000 in buying power. You get more coaching and you get capital. But if you can't do that, or you have your own money and you just want to trade for yourself, this coaching is great. You can still sit in. I'm only going to do the group coaching sessions once a week because I'll be so busy with the prop guys. But that's 3,500. It should probably be 6,500. It's a ton of value. My first program I ever bought on Forex was 12 grand, and I got a weekend course, a live room with a moderator who wasn't even a trader, and I didn't have any access to the head trader at all. He just was the one that taught the course. But I took stuff from that, the Forex, and some of the concepts that he used, and we brought it into the fixed income market, and we literally made millions from it. And I taught my clients to make millions. I would sit down on the swaps desk, and one or two things that I learned from that Forex style, we applied to the swaps market. I'd have million dollar days with this swaps trader. We just trading 10/10s. He would get long 100 million. I was trading tens. He would come inside and he'd have me work his orders, but he would trade 100 million, and he'd have $1 million days just trading those simple concepts. But the point is that I knew a $12,000 investment in myself, that this is what I wanted to do for the rest of my life, whether I was investing or actually trading every day. I knew I could take that and over a lifetime earn back $12,000. And then nobody can take that type of stuff away from you guys. So when you start to think about investing in yourself like that, this money should not be a barrier at all. It's really a broke thinking if that's your mentality. All right, so that was before, and now here's what I wanted to touch on the so I've looked at different firms. I spent a lot of time in Chicago. These guys are probably, I think, one of the more modern, or if not the most modern prop firm that can help traders all over the world. So obviously that's our audience, and that's where our team is. Try to wrap up here. I don't know if you guys heard of them. Pretty good. You can go find other prop firms, but they're more local in nature, and a lot of times you're gonna have to show up. You have to be physically at the shop, at their location, which is good sometimes because it's a little bit different environment, different connection speeds. But a lot of times you got to bring capital. So like one of the traders I used to cover who's at Balyasny, I think he went to DRW, which is in Chicago, and then he went to DV Trading. And you got to show up with 100,000, a decent amount of capital for them to want to back you and then give you more capital. And that's kind of the majority of the prop world. Or you have a lot of shops that will stick you in a simulator, and literally they make the simulator so hard, and they don't give you any training, like I just showed you. They don't give you anybody that coaches you. And that's their whole business model, is basically take small monthly fees, and then you kind of get stuck never getting to any type of levels that are doable to progress. And so I looked at these guys, and they don't have a lot of that structure. They actually have a lot of people that go individually on their own that get to these live funded accounts. I mean, they have a lot of traders that do it, which is pretty big feat. So anyway, I know what programs like that are no good. And so you kind of run into some issues like that on these smaller accounts, like the 30,000, 50,000. It's kind of tough to trade 3 contracts, and they have their own set of rules. We don't have to get into all of it. But when you're scaling into a position, they won't let you go 3 contracts deep in negative territory. And so basically you're stuck kind of like plunging in on one, and then you got to hope that you're right. And it's just a harder way to trade versus what I want to do is start you guys over here on the most amount of contracts. And they still have their scaling rules. But once we start to get in the money and we get our equity curve up, 15 contracts is plenty. Like I showed you guys what I was doing on 10s here. I mean, just one contract on Brent today, that was up $1,200. So when you start trading something that moves around more like long bonds, just to trade one lot, and that's the other thing, if they say 3 contracts, the problem is like, well, if you want to trade the 5-year, okay, that's one contract. And you wanted to pair 10s off against that, there's one contract. You don't even get to put 2 lots on 2 different pairs. So the guy that has less capital is at a disadvantage because it's harder to work a position. I think you guys get the point. So 15 contracts is plenty. You could be short 5 5s. You could be long 10 10s. Be short 3 5s and long 3 10s, and then be trading S&Ps against it. So if bonds go up, you're good. If stocks come down, bonds are going up, you're good. If bonds roll over, probably equities are rallying. You can have 2 or 3 contracts on S&Ps. There's much better way to trade global macro in that environment. Does that make sense to you guys? Are you with me? Makes sense. Brett, what's up, Rob? Rob, you're on the second stage? Oh, nice, man. Which one, on the 50,000? 5 lots, but stage 2 only 2 lots. Yeah. I mean, I could see that. So I think you ought to be over on these 2. Yeah, right, Brett. So working your size. What would it need to adapt on the model? The model, I mean, nothing directionally, it's all the same. How you want to analyze the market, right? And how you approach exiting and entering around the cycles. But what's nice about this process too, yeah, I mean, you have some restrictions, but sometimes that's good because you're gonna have. I've seen traders, I've coached a lot of them. You tell them one thing, and then next thing you know, they're averaging into a position when we never teach that. And so you can kind of get outside start coloring outside the lines pretty easily as a trader. So this kind of keeps you in line, but you don't have to adjust stuff on the model. It's just a matter of kind of setting out a game plan as far as what you want to trade. You're obviously not going to be able to trade oil, gold, silver, have the other side of VIX futures, 10s bonds, and the Russell and S&Ps. The way to do it is you say, okay, we want to maybe have an exposure in bonds, and then we pair that against long equities. And then again, you just trade the model, but you always start off slow. Anytime I have a new trader, you start off slow. because you have to build that equity cushion. And then even in a trade, right? I teach you guys in a trade, we want to add into the direction of our positions. You don't average down forever. We'll average in to a point, right? But then I teach you guys, you got to see the turn. You have to have the cycle confirmed, and then you add to your winners. All the big traders are adders. Well, it's the same on your equity curve. You can't start adding and getting aggressive till you've built up that equity. And then they even do the same thing with their scaling, as you don't get to go to 15 contracts right out of the gate. You got to build into the positive P&L first. So that's all part of planning out the trading plan. All right, so guys, these are the different steps that Rob is talking about. Okay, so the old options are, and there's still the options are, you learn to trade, you take courses. You can do the group coaching that we used to offer, but I didn't have any opportunity for you guys had some of you had smaller accounts, you want to learn futures. This is the best way I think that you can do that. And then you still have access to my time. So I'm going to run it at there's going to be two programs. There's going to be, let me draw up here. This is my old this is one of my prop sheets. This was from 2015. I did 194 grand through 9 months, and then I left the firm. This was the year I left. But let's go back to here. This all right, so this is the way I look at it. You wanted to do coaching, it was 10 sessions. You get to be with me every day, and I'll help you work through this program. And for my time, and it's a pretty big commitment. I'm gonna work with you guys on this this account size and help you guys get through it. And the prop program is going to be $5 grand or $499. And this is going to be for the first five traders, because I don't want to start this new program with 10 people that are everybody's getting pulled in different directions. Only want 5 guys, the first 5 people on this team. All right. And then what I'm going to also do is do an inner circle type of group that's eventually going to be 10 grand. And that group, we're actually going to get together. I got a couple vacation deals that I belong to, but like there's a couple new resorts in the Caribbean that we're going to set up, have a live event. And this would be more of a kind of a one-on-one type of relationship where we get together in an office setting, do seminar, and that would be like a core group of guys. So I don't know how many people are ready for that. That's going to be one option, but then the other option is this is going to be $5 grand. And I can I'll probably put together a visual on that other page I was on, this trading package page. So you guys can click through on that. But that's it. I mean, I look at it like for an extra $2,000, you get my time for an entire year. And I don't get any commissions on them. I don't get to share in any of the profits. But once you guys get through and live, you get to keep the first $5 grand that you make. So that's the whole goal, is get you guys profitable. If you get all your coaching, you're all the model, which in and of itself is worth $5,000. But then you're going to get trade live with me, help you work through the process, help you get profitable. And what do you have to risk? You don't have to show up at a physical location like another prop shop and put up 50 grand, and your capital's at risk right off the bat, and you just kind of go it on your own. That's really the gist of it. And I had oops. And so this was just some of that Forex guys were doing. This is one of my traders, I think the first week after he went through the model. This was the kind of consistency he had. And I don't care about the dollar amounts, it's about the consistency, because you can always add more buying power and add more dollars or add more zeros. This is one of my futures traders. He never had this size of months before. 9 grand, 10 grand. This was January, did 8,500. He was trading a little bit of agriculture, following me on S&Ps. But that's the big thing, guys, is about the consistency, is what I keep stressing. Live cattle, copper, crude. I mean, Rob already knows this, but let's see what products, where is that? What shows all the products in trade? So I like that the bench is deep as far as what you can trade here. So we trade a lot of S&P minis. You can take your positions long dollar, being short the euro. That's huge for global macro. It can be long the yen. That was the best places to be for the first 6 months of the year, was long the yen. Ag has been pretty choppy lately. A lot of the commodities still haven't got the same energy as like the metals do. But those are an option. And then I love how they have all the futures curve pretty much. And I would expect that, because the bond guys are all out of Chicago, so it doesn't surprise me that they're trading everything across the curve, which is huge right now. And then you got your gold, silver. So that's plenty. What else? Some of these guys were crypto guys too that sent me stuff. Nailing it in bonds and futures. Oh, that was Alexander. Next couple of days will come amazing performance. That improved tenfold. This is a big day. It was 8 grand. What is this? This is a dollar CAD. We still have a lot of Forex traders. My first full week of trading during method, I traded 1/10 the account size, but just to get comfortable with things, size is not important. It's the consistency. That's what I keep saying. I only had one tiny loser all week. That is ridiculous. Best trader we come across online, blah, blah, blah. We were putting up big numbers in crypto. 400%. That was in January after the market rolled over. We had a lot of guys, because we were getting out, and then some of these guys were going short on the intermediate term that I was teaching. Christine, she 50,000 in profit last year. Still working a full-time job, just following a lot of the global macro stuff we were doing. There's a bunch of pairs: euro, pound, dollar, Aussie CAD, Aussie Swissy. Live action, digging into this stuff, man. Best information I've ever bought. Great call on the Dow, FTSE. That's pretty cool, man. So that's the thing, guys. When you learn my model, I mean, what would it be worth? Again, $5,000 over a lifetime is nothing, but you're gonna get the chance to have capital to trade, and I'm gonna go every step of the way with you. But just learning the information alone, I mean, what is that worth? You can trade any market, any time frame, anywhere in the world, as long as the market's moving. I mean, That's just a great value. Couldn't agree more. Yeah, Alan's he trades a lot now. He's freaking nailing it. All right, guys. So here's the way to get started. I mean, I'm only going to take literally. I'm just looking for 5 guys right now, so I wouldn't mess around. You guys that are on here now, Tyler, they just came out. If you can keep your positions overnight, they just came out with an email saying that they not relaxed, but they changed some of the rules. You can take some positions through numbers now. Like they were really strict on which numbers. Now they're letting you take through some of the less volatile numbers or the less quote unquote important numbers. But there's some overnight trading that's permitted. I can get you more of the details on that, but that's not actually the goal, because when we're starting out on a prop program like this, it's easier to control the risk by doing 80% or 90% day trading. Because as soon as you open yourself up to holding stuff overnight, I mean, it's your swings are going to be so much wider that it's harder to control those tight drawdowns and the risk parameters, the max losses in the beginning. You just, especially if you're not hedging or you can't take as many positions. I mean, we didn't all the guys on the institutional desk that I taught, we didn't never let them take positions overnight because they didn't know how to hedge it, and I was taking all the buying power that we could take overnight. I was taking it. They didn't have any clue on how to manage that stuff. The typical week, well, we'll be trading markets that are the East London hours. So you kind of, I mean, you guys can trade kind of how it fits your schedule, but I mean, I'll be up for London sessions sometimes. So it'd be open in the room for that. But then we're on it trading every morning like we are right now on our coaching team. I have that new cycle edge room. So some of you guys may not know, there's a quarterly membership. It's $300 a month, but this was designed for trade alerts, analysis, and there's just a 1-hour room every day. But you guys are going to be much more in depth. It's more like a 24-hour open room. But I'm trading mostly from US, obviously. So watching the market when you first get up, if that's 5 in the morning or 6 in the morning, communicating. But we'll have a room. This is a Symphony platform that is a financial platform that competes with Bloomberg. It's a completely secure platform that banks use. It's not like some dinky video game app or Slack. But we'll have a room set up specifically for the prop team. So if we're at levels at 6 in the morning, I'm not going to run to the office necessarily. A lot of times I'll be here at the office then. But if I'm on the mobile, be communicating and telling you guys these are the levels that we're looking for in the euro and we're covering or we want to get long. But then every morning, I'm trading every morning and pretty much all day, every day since 2006. The afternoons won't be very busy because energy is just it's going to be mostly in the mornings. And then you might get busy in the afternoons. Yeah, and then the reporting is not going to be on my side. I mean, we'll keep track of some stuff like I showed you guys on like that I would do, because there's something about you have to treat your trading like a business, because it is. If you want it to pay you like a business, you have to treat it like it. If you want to pay like a hobby, you can treat it like a hobby and not pay attention to your numbers and stuff. But they'll have they have they have a lot of that built in, which is nice. Because that was one of the things that I could ask you guys to do this and send it to me, but it's hard for me to manage all those metrics if you don't have it set up in automated software and that type of thing. So it's good that these guys have a lot of that built in. I don't know if that's the question. So what we do is get together every week, and just like the coaching guys that have you send me your trades, I'll have you journal trades so I can see. You're going to be following a lot of my trading, obviously. I mean, we already do that a lot. Like some of you guys have gone that are in the live room, right? We're all kind of in a lot of the same trades, but it'll be even more so because you're not going to have as many lots to go running off and chasing live cattle or doing something else that I'm not trading. But I'll still have you send me your trades based on how you traded via the model, and I'll teach you guys that journaling, and you send me those charts and we'll get together in a coaching session like that weekly to kind of huddle up and see and work on all that psychology of trading, or what some of you guys might be hung up on, or if you had a bad week, talk about it. Or same thing happens when you get on a winning streak. Like I had one guy that was coaching that just came in coaching. I started coaching him last month. He came out and he had like 9 winning days. He couldn't believe it. And he had started to have all his family wanted him to invest money, and he actually did the right thing. Like he went slow with that and told him no, and he didn't want the pressure. But he was just absolutely killing it. And I had to work with him a little bit on helping him realize that your P&L is gonna kind of ebb and flow just like a chart would, right? So when you have those big winning streaks, there's a balance between staying confident and like adding to it and trailing it out, and just adding to it to milk it. But then it gets to a certain point where you got to really back off, because if you keep pressing when the cycle turns, you're going to end up giving it back a lot of that. And so there's stuff like that we work on when you have winning streaks. You gotta have certain conversations about sitting on your hands. Anyway. So guys, this is what I need you to do. If you want, because I didn't have time to set up the payment processor on that page, I'm gonna put that on this page, but I want you guys to email me. Email me at this email if you're ready to go, if you want to do this. Again, the first 5 guys that want to do it, I'm ready to go, because we got the Fed out of the way. They didn't cut enough. The bond market's already starting to rally again. And the last 3 months of this year is going to be really good trading. So it just is what it is. There's plenty of you guys that want to get going on this, and I don't really want to sit around for it. So just email me that at trading@jenkinsrm.com. If you guys are in a rival room, you obviously can message me there. I think some of you. So if you guys do the prop program, you get access to the real time alerts and the analysis, obviously. So you get access to this room, the cycle edge room. But even if maybe the coaching is not for you, or for whatever reason, this is a great team to be a part of, guys. It's $300 a quarter. And I don't know if some of you know like Real Vision. I looked at it like, okay, I don't know how much we're competing versus some of these other services. Like I look at some of the other educators out there, they're trading penny stocks, or they're all over the place on options. And it's very much about like I'm going to give you fish and follow my trades. They don't really teach you how to be everything that makes you to be a successful trader. But we want to be more about team environment. But you have your shops that will send out research, their global macro research, and they charge $4,000 a year. And all you get is video and the big global macro themes and maybe like a weekly report. That's $4,000 a year. That's worth it. I mean, if you get long euro dollar futures on their recommendation, you could have made a lot of money in the last 6 months. But I wanted to be something that was comparable in price, but we're giving you, I mean, guys, how many alerts do we have in this room every day? Day trade alerts, a dozen, half a dozen, swing trading positions, longer term positions. So that's the cycle edge is you get all that type of analysis in a team environment, real time alerts. I mean, everybody at a minimum should be part of that. That's all I got. Any of you have any other questions? I think I got to yours, right, Tyler? Oh, right. Yeah. All right, guys, email me. I'll see some of you in the morning in the room. And that's all I got. An hour and a half. Let's just see where the futures closed out today. Oh, we had another rally in the euro that came back off. We were shorting into this move this morning, covered. You guys see this blue line? There's pi. We cycled away from it short, covered back into pi. There's a wall concept here I'll teach you guys too. This is a pretty easy setup right here on this bounce. And you just had another cycle back down. All right, that's all I got. Thanks for jumping on. Hopefully some of you get to work together. I'm excited about it though, because it's a good challenge for me, and I know that program puts out a lot of traders that trade live. But just what I've seen with our team over the years, again, I mean, I've walked through 54 traders on this stuff, and you guys get really good results. So I think it'll be a good challenge to see how we do. I don't know if there's a lot of other teams that work through that group, but I think where the economy's at in this cycle, I think it's really important. I mean, there's going to be, if we roll into recession, there's a monetary crisis on the horizon it's going to make 2008 look like a walk in the park. And people, they hear that type of shit, but they really don't realize how bad the bond market is, the liquidity. I mean, these bond markets have been absolutely destroyed by these governments and this whole negative rate policy. So there's going to be a huge opportunity in the rates market and bonds. And there's going to be so many people that just average people that get so run over in those types of environments. And that's always been one of my things when I started the company and I left Schwab, is I had a front row seat on the retail side of Schwab, seeing people lose half their net worth. Nobody told them how to hedge. Nobody told them how to get out of the way, let alone how to actually profit from it. And so that's the whole point of this team, is you guys that want to be independent traders, that's the prop program. People that want to just run money with us as we do our managed accounts, that's fine. That's kind of a more passive approach. Or just about analysis about, I have, like I said, there's one gal in there made, Chris, she had that testimony, she made 50 grand. Well, she's in my live room. She learned the model, but she is a full-time job, but she's putting on longer term investing trades that we're putting out analysis and stuff on. So that's what we want to do. All right, Brett, man, you're welcome. Hopefully, you guys got some good value out of the cycle stuff. Maybe learned a little bit on the psychology of trading. Okay, Lucy, it's good to hear from you. Okay, Brett, man, yeah, send me an email. All right, guys, I'm around. I'll answer you back. I'm aware of who was here, and I'm gonna send this recording out too. So, um, but if this is your dream or you got, this is the time to make those moves and don't put your dreams on hold anymore in this stuff. And the market's telling you is going to be really good in the last 3 months, so there'll be plenty of opportunity in futures. All right, guys, enjoy the rest of your evening. See some of you guys in the morning.